Good afternoon, Scott Redler, Chief Strategic Officer at T3Live.com. I almost forgot my name for a second. That's how long the day it was. Anyway, happy Monday. Today's the recap. As far as the market's concerned, there was some contained weakness. It seemed as if we felt a little weaker than we were, but also for those of you following Apple, looking at it down $18, $20, that could help stray your judgment on where things are at. Even if you're not long it just still, you look at that and it makes you get a little bit concerned about other things, even though the market is hanging around. And if you look at the chart of the spiders or the S&P, you'll see, no real damage here. Market came in a little bit, almost touched the 8-day again. We've been following this 8-day moving average, ever since the first 2 days of the year. If you remember Christmas Eve, we ignited, gapped up the first day, let the 8-day catch up, consolidated above this, this trend line that's been intact since, September 14th. So all in all, you look at this, nice sideways action, nice digestion. I know it wasn't powerful to the upside, but all in all, hovering above this area gives you no reason to be, typically net short. You could be short certain stocks, but to be short the indices and fight this doesn't make much sense, because if we do push through this, just say, what is this, 148.11? You're going to see guys that are shorting here. Look at the size of this gap, the pent-up power. There's going to be another nice little squeeze there. And if you go to the weekly chart, you will see, we are pent up right in front of those old highs. You could even look a little further back that once we do take that out, which it does feel like we're going to, the next real level doesn't come into play. You have 149.68, okay, and then you have really, 152.89. So it's really almost 1,500 and then 1,520, 1,530. So we'll see. A lot of guys are trying to call tops out there. A lot of guys are cost averaging into shorts, but they're missing some pretty decent action. They're missing upside. Wait till we close below the 8-day. Wait till we close below the 21-day. Wait till you see some kind of movement like we saw here. You guys remember this, uptrend that we had in place? I think guys tried shorting it starting here, okay, on this breakout, and they didn't cover when we took out these prior highs. And then from there, after riding the 8 and 21-day moving average since the rally got some juice, so to speak, in July, you really didn't have to get out of Dodge or take risk off until, the 8 and 21-day closed below, curled lower, and then we took out, this 143-ish. And then from there, it was good to be tactical, good to be in cash until we had this reversal on November 16th when we were in Vegas. Okay, now look where we are. This little time period was choppy, and maybe we get a little choppy again in February where the debt ceiling comes into play. But as of right now, market's hanging out, pretty well. You look at the financials also, hanging out here, still hanging above the 8-day and the 21-day, looking good. I know we have some earnings coming out in, JP Morgan, we have Goldman, we have Bank of America. So there might be, some more choppy type trade. But overall, on a daily chart, we're overbought. You look at something like Bank of America that has come all the way from, $8 when we were talking about it way back when here, to it's, it broke this trend. It's hovering below. So just be lighter. If you're not going to get back in Bank of America at some point this year, then just hold a little. Okay, if you're an active trader and we break below the 21-day, then get flat. As long as you're going to get back in, because look at me with Yahoo. Yahoo, I sold some strength, and then I got out on this day. I got out when we broke below this little trend line that I was drawing right there. I'm like, what, I'll get back in. I was out on Friday, and I didn't re-enter. I didn't re-enter near the 50-day, and right now we're back in 1943. So chances are I'm not going to re-enter until even higher prices. So for guys that are in a macro position in Yahoo, ever since it broke above that channel and had this nice move from 1660 or so, just know that you better get back in if you want to be involved on a move that could take it as high as, looking at the weekly chart. I personally think it goes to 23, 24 this year. So look at the size of this channel. Really nice break to the upside. It did clear this area for power. Here was, the first part of it, which was the reason why we had that 1660 as a level. And now it's, it's just a little faulty. If you go to, we were just on the banks. This is just so you can see here. Here's 1450. This was, the low side of my objective for the year. So we still have room there. And then, you have Apple. Apple is, this enigma that people don't understand right now because it's trading at such a low PE, and it's continually being sold. And even news like today that Piper comes out and says it's old news, people don't care. And it's just really been for sale. You have a market that's up 50 handles from for this year, and then you have Apple that is down about 30 points, almost 40 points in the same time period. So if you think about it, when an S&P goes up 50 handles, the NASDAQ goes up a certain percentage, there are vanillas that buy correlated to the actual stocks. Meaning, like if Apple's in 8% of the NASDAQ, 8% of buying goes to it. So if the indices go up like that and that buying is spread out amongst Apple, and if Apple goes lower, that means institutions that are concentrated in Apple are selling into these buy programs that's showing you relative weakness, and we've been seeing that for a while now. So anyway, you go to the chart of Apple, and it's getting real dangerous right here. Okay, here let's do the daily chart first. This was your high here. Okay, remember, just real quickly to show you how you could ride trends till they change. This was 2 quarters ago when it gapped lower, but the market didn't care. At that point, like, oh wow, why isn't it going lower? It's bad earnings. Meanwhile, it traded differently then. You had your quick move up, and then what it did is it rode the 8 and the 21 day all the way to the peak. Okay, and then what happened here? It closed below the 8 and the 21 day for the first time. That's what got me out of my swing trade then. And then that contained it the whole way down. Okay, never reclaimed it. So it was always, showing flashes of weakness. Every rally was sold. Okay, and then lo and behold, you go to this area. This was your first red dog reversal, first tradable bottom. Okay, and then gave you a move right back to this trend line, and then came down way too quick. Anyone that was battered and bruised from this area was like, oh my God, I can't believe that this is back down here again. It should never have even really broken this if it was going to change. So from there, it gave us a few trades back and forth. Here was a decent, I remember, 2-day trade. Then you had this little igniting bar through this trend line. But then remember we said, if it doesn't hold this gap, it's not changing, and the chances are of it going through this major downtrend is not going to happen, and then pow. And then unfortunately, a lot of us were trying to get ready to short 515, so to speak, last week. You had the Tim Cook in China Mobile, blah, blah, blah. It gapped up $10, and then within the first half an hour gave back more than 50%, almost the entire thing. So right there, that was weak. So those of us, including me, that tried shorting 515s lost money. And then you come in today, and it's down $15 at 500, and then you would think that, okay, it broke 515, maybe we get a good trade through 501, 505. And then it went to what, 498.50, and then closed a little bit above 500. But if you look at the chart here, very dangerous. It just engulfed this entire down move. I'm going home flat. I came in flat. I wish I was short. Some guys were short, looking at the relative weakness here. Tomorrow we'll see where it opens, how it handles 498.51. You take even a little bit of a macro look here just to see where it could potentially go. Let's just look here. You have this little low here is what is this? No, we're looking right here. Sorry, 486.63. That's where I was hoping it could flash down to today, like 486 to 492, make some money short. But they're giving no money to people trading intraday on this thing. When it looked like it was going to get momentum to the downside, they squeezed it. And then if you go to your 5-minute chart, anyone that shorted it here, okay, then probably got squeezed out in this wedge when it went above the highs. I know for me, I made a little bit of money back when it broke above the wedge, and then we saw this little topping tail. I got out, and that was that. But overall, anyone who shorted here hoping to get the downside probably got squeezed out into that, and then from there did nothing. This was your last little wedge type pattern on the 5-minute. If you look at it, you could see it closer here. So that's that right there. Some guys caught short below 503, but then lo and behold, again at the end of the day, when you thought maybe it would get some momentum to the downside through the lows, it held. And I know if I was trying to buy 500 there was no way it would have held. But anyway, closed here. We'll see where it opens tomorrow. If it opens up into 503-ish, we'll see if that's resistance. If it opens below it, it is what it is. But at this point, a lot of reasons to be out of this name, a lot of reasons to be very hedged, because you do have 486 and then you really have 440, and this trend has been very, very strong to the downside. Anyway, I'm not going to harp on Apple. I'm going to move on, because guys are like, oh, how could Amazon, which trades at a PE to a Pluto, why is that holding up very well? You know what? At this point, it is what it is. This was the descending channel, went back up to resistance, broke below, engulfed it, came back up, and flagged right above the highs, and and then had a nice day. All right, the action is telling you that this one's still chosen. I wouldn't be, in tier 3 here at the highs, but this is a nice trade that guys are getting paid sticking with versus some others. Google today, did show a little bit of active trader weakness, so to speak. If you're a short-term trader and you are trading this as it's been riding the 8-day moving average, today was your day to get out of it. Just as an active trader, like very active. It still didn't give up the 21-day, and it still, has come back to the 50-day a few times. So, if you got out today, okay, and you're a swing trader or a macro investor in Google, and you say, I want to be in this thing for what could take out the highest here at some particular point, you might be happy today, but if it does come in to the 21-day or come into the 50-day and does some kind of tail here, and you're not watching it, and then it goes sideways and then continues and then takes this out, you didn't do so well. So, for active traders, you got out of this. Some guys are probably even taking this home short. It closed on the lows. That's fine. You have to know your time frame. But all in all, this higher level area got broken, and now you need to see what happens here. And then Facebook. It's so funny how things can be misinterpreted, and that's why you really have to know what the resources you have and how to use them. I know on the price point sheet, I had Facebook. I think the exact price, I'll tell you in a second, $31.96. I had it as a buy and a sell. Okay, that means if it's on both sides, it's a potential red dog reversal trade opposite of the trend that it's been in. And Facebook's been in a very strong uptrend. Anyone in this world knows it. You hear about it every second on TV. We talked about buying it, around 23.74 or 24, and then again at 28.60, then again at 29.79. So for those on the virtual trade floor who watch, they've seen it green on my screen probably 90% of the time from then, meaning I rode that move. Then for the first time on Friday, I sold it, said I'm done, and then I took a little bit of a cute short, which I'm like, okay, I think from 32 to 34, I could probably be a seller there first. So this morning when there were 2 upgrades, I tweeted, I'm like, come on guys, from 24 to 32, now there are going to be 2 upgrades. I wouldn't chase here. Then if you look at Facebook, it's not blaring, but it opened up above this level, and that's the level right there, 31.96. So that's where I kind of added to my short. And then it gave you a nice move lower, covered some, and then towards the end of the day, I'm like, you know what, I'm done with this. Nice calculated trade right in here around 24. Gave you a nice move to this outside day. Remember on this day, we got out, got a little bit short, covered, I think, somewhere around here. I was like, you know what, it's not worth it. Waited for the consolidation. And then here was your entry, and then here was your additional entry when it took this out. And then this was a bigger resistance. If you look here, I talked about it in the morning call, into this congestion, a lot of people here, a lot of old memories between 32 and 34. And this was my objective for the year end, not for, second or third week. So decent spot to sell. Tomorrow is the invitation. We'll see what happens. I'm flat overnight. It's been a heck of a move, guys. So at this point, we'll trade it tactically until we get a little bit more data and see how it operates. But overall, really nice tier system type trade. Tier 1, Tier 2, Tier 1, out of it. Tier 1, Tier 2, sell some into strength, out of it, test some shorts, and then boom, get a little bit trade, a little bit of a cute trade. And now we'll see, does it hold the 8-day? Does it go sideways? Does it develop a flag? Like it did, hold on, like it did right here. It took a lot of time to absorb this move. Remember this? It took almost a month. So you have the same type of move here, same size almost. Actually it's bigger from where it broke out here to, to this move. So why wouldn't it go sideways a little bit? So we'll see what happens. We have a major event tomorrow. We'll see what's going on. I personally don't think it's going to be a phone. What do I know? I'm not an analyst, but I would just think common sense-wise, why would they make a phone? Why would they get in the hardware business? We'll see what the thing. It's something more on the retail, being able to click through, buy, media store, or something like that. We'll see. But anyway, at this point, let everyone speculate. I know that we had a nice trade to the long side, little cute short. Just because of the way things operate on event day, I didn't want to keep my short. If there was no event day tomorrow, I probably would stay with it and see if you get a continuation, but we'll see. And that's that. As far as Dell, Sperling, as much as he cries, and I hate to say he cries, but he does sometimes, how, he was caught in a few things in the beginning of the year finally. He was long something for the right reasons because technically it made sense. He bought options and then he got halted on that LBO buyout news. To see the chart, just to show you, sometimes you don't have to know, what's going on behind the scenes, but ever since November, you had a nice trend up. It triggered right here. If you remember this day, gave you 3 powerful days, and then what did it do? Nice tight formation, which is what we love. We love tight formations because when they expand, they go. I think he got involved in the options around 11:30. this was your price point, 11.33 for it to continue. Big, short interest there, and then pow. It actually even gave you a trade when it opened up. I didn't have Dell, and I was like, you know what? I think maybe it could give you a little bit of a cash flow, nothing so severe. But so if you look here, when it opened up, it gave you a little bit of a trade here where it held in tight. So I was a buyer into this 12, and then once it took out 12.20, I bought a little bit more, and then I sold into the 12.60s, and now I have a little bit small overnight just in case. I did short HBQ just to have something short, if it gets refuted. But reason being, I think that, from this reversal here or the breaking of this downtrend, it's had a really big move. It's extended from the moving averages. So for me, I think, it's a better short into this, and I have like 7-8 long, so why not, have a little bit of a hedge there. BMW does look like, you have a nice chart here, nice setup. I did get long today. It closed near the highs, so we'll see if it could break above this and get some momentum. CRM has been best in breed in that group. This was when we had a macro focus on it and off the charts. Boom, held, continuing, still looks good. Some little guys, this dang, it's not like anything to really write home about, but it had a little bit of a move today. We got long. Some guys were talking about it on the site around 470-ish, 475. Let's see the volume, see if there was any volume in this thing today. Yeah, nice size volume, right? So at this point, who knows? Long some, if you're trading one stock, just so you know, if you're a trader, this should not be the one stock. If you're in 6, 8, 9, 10 positions, it's worthy of a try. There's some volume. It's got levels. It's a nice little treasures for trash trade. Same thing with Zynga. If you're just trading Dang and Zynga back and forth, you don't deserve to be in the business. But I guess maybe you're a rebate trader. Who knows? But Zynga also, we've had it a few times. It's trying to build this lower level here. I don't think it's anything compelling, but it's back at this 270-ish area. It fell there today, but maybe at some point, who knows, it gets something there. I know Sperling's been trying to accumulate it. It did come from all the way up here. It has this lower area, so it's worthy of something. Something, I don't know, but we'll see what happens, from there. It's one of those what we call treasures for trash trade, where someone else's trash could be your treasure if the volume stays there and it continues. And right now, this one is a little bit suspect, but we'll see. Whatever. It's something to do. In this market, you need some things to do, but you do them on a disciplined fashion, a disciplined approach. And, again, markets are kind of hanging in there, putting Apple in the corner. Hard to trade Apple, but it's better than being caught in it, and if you, like for me, I'm having a little bit of trouble because I'm not very comfortable short in it, but at least I'm not like buying it and closing my eyes, and I've been trying to keep the community from doing that, and I don't think anyone had it long overnight because it didn't give you any reasons to be long. So, we didn't have the debacle of coming in down 15 to 20 bucks because relatively speaking, it's been very weak. So with that said, still a lot going on. Keep managing and maneuvering your positions. Big Ben's probably speaking as I do this, so we'll see what happens when I go out. I know Lulu, after the close, did some guidance. If you got caught in it, it freaking sucks, to be honest. I'll just tell it like it is. You look here. It's been acting sort of well, holding above the moving averages. Today you had your first green day, so for some swing traders, I didn't buy it, but some people might have bought it. It reclaimed the 50, and then all of a sudden, on some volume 2, it's, after hours trading down. Let's see if I can go to the after hours time plate, the time plate here. Equities. I don't know exactly how to do that on this one. I do it on my e-signal. But anyway, if you're caught in this and and you have it, it is what it is. It's like it's like you're double down. You're taking a double down on an 11 versus 6, and you got a 5, and he turned it over, and he had a 4, and he gets a 10, and you just lost your hand. And you'll see, maybe they could buy it tomorrow. This is support if you're trading it after hours. This area right around 70. And again, close strong on a weak tape with some volume. If you took it home long, it is something that I probably would have done if I was trading more retail stocks. So it is what it is. I'll try and help you through it tomorrow if you have any questions. Happy Monday. Tomorrow's Tuesday. Have a great night. See you tomorrow morning with Brittany at the morning call.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.